Super. Thanks, Allison. It's great to be here. Wish I was there in person. So here virtually, at least. But I'm envious looking at some of you sitting there, at the sports center, and seeing some familiar faces here as I scroll through the screen. Hi, John. And Jake, you're looking like you got a little freshened up, a little haircut going on. Little trim, let's say, one of our interns, students in residence. So welcome, everyone. What I'm going to do today is talk a little bit about some research that we've been doing over the years, and in particular, the most recent study that we completed and released in January or February of this past year. It focused actually, interestingly enough, on MBA students, and in particular, what their interests are in entrepreneurship and in venture capital, and what they see as the barriers, and really what their motivations are. Why are they interested in those areas? We did this research pretty widely, and I'll share a whole much more detail about that as we go through the presentation. I thought it might be helpful, however, to give you a tiny bit of background on who is Illuminate Ventures. There are a few of you here on the session that are familiar with us, but many not. And I think our perspective is biased, if you want to think of it that way, by the kind of investing we do and the areas of focus we have. So I'll share that with you, then go through that research. And then if we have time, I'll also share some research that we did collaboratively with Scottie Ventures, which is the undergrad program of students that are interested in venture capital, where they took a look across our entire deal flow, well, a subset of our deal flow from the past 5 years, and did some very interesting research and with that data that we'll also share. Ideally, I would like to make the session super interactive. I know that is really hard on Zoom, and I know some of you are there physically in the sports center. What Allison and I talked about beforehand is if you have questions, you can feel free either to put them in chat and we'll come to them, as we go through the session, or you can, if you're there physically, step up to the podium and ask any questions that you may have, or relay them through Allison, whatever you're most comfortable with. But I don't want to make this be just a monologue. I'd really much rather see it be a dialogue, and I just really welcome any questions you have along the way. So who is Illuminate? We are a firm that is really focused on a different set of investing criteria than a lot of venture capital firms are, and certainly a lot of our peer group firms are at the seed stage. But we are 100% enterprise software focused. We have 3 funds under management. We've invested in more than 30 companies across that. So that's actually a relatively concentrated portfolio. You'll see some seed stage investors that are investing in as many as 30 or more companies per fund. That's not our strategy. We do that concentrated approach both because we think it outperforms other strategies, but also because we bring a whole set of resources to bear to support those portfolio companies. One of those groups that we'll talk in a lot more detail about is our internship program and our students in residence at Carnegie Mellon. But another is also a group that we call our Business Advisory Council. That group includes more than 45 members. Between them, they have sat on over 100 public company boards and more than 250 private company boards. So these are super experienced people in the enterprise software world. We talk about our firm and our strategy as opening the aperture wider. What that means in part is just creating a really level playing field for all entrepreneurs. And results of that are pretty clear in our numbers, because our diversity amongst our founding teams is way, way, way ahead of the norm. And I'll show you some numbers that'll be comparatives there. So that's Illuminate. We're really actively involved in the portfolio companies that we invest in. We also have just a fundamental belief as a firm that we should be continuously innovating in the same way that our portfolio companies should. So you'll see here a history of doing some really interesting things as either first or the early ones doing these things in our industry. So our student in residence program started only about 5 years ago, but our internship program started literally 9 years ago. These are class year internships. They're not during summer internships. And that was really a unique approach to bringing other people into the process and helping them to both them learn, but also gaining all of that additional resources to work with us during the class year as well. All of those items you see that are highlighted in, I don't know what color that is, maybe melon, orange, whatever you'd like to call it. Those are things we focused on that have to do with our very strong interest and belief in the importance of diversity in the tech sector and ways that we've gone about trying to expand that. We don't use diversity, for example, as an investing criteria, but we do a lot of things to be much more inclusive. And by doing that, we believe we can then still just choose the best opportunities we see, and we'll end up with the kind of diversity that we choose and hope to have. So that's a little bit about us, and just our portfolio is probably more interesting than we are. So I'll share just this one slide that highlights some of the real success stories in the portfolio. The upper right and upper left are our IPO companies, exactly went public and then was acquired by Vista Private Equity, who you may have heard of, one of the really big private equity firms in the enterprise software category. They became what they call a platform play there, meaning now Exactly is rolling up a bunch of other companies into a much bigger organization that eventually will probably be spun out to go public again. Coupang on the right, you may have heard of, is the largest e-commerce player of Korea. They had the single largest IPO in the United States of a non-US based company since Alibaba. So it's a very significant story behind their success of going from literally nothing to a huge valuation at $84 billion at the time of their IPO in less than 10 years. So it's an amazing story. Some of these others are super interesting. Allocadia is actually founded by, yes, identical twin sisters in the marketing automation space, just was acquired. Pex, many of you may have an interest in if you're creating content, because they are the platform that can take all user-generated content and ensure that you have your digital rights, meaning should you be paid a royalty if YouTube is using it to generate ad revenue? Should you have the opportunity to take it down if it's being played somewhere that you didn't authorize? And that's true from individuals all the way up to some of their customers include the largest music video companies in the world, Sony, Warner, MGM, all of the top players, very interesting companies. And then Content Stack on the bottom right was one of our most recent announcements. In every one of these companies, we were the initial round of funding. So just to give you an idea, we invested in literally, and there wasn't one of them that more than $3 million went into in their seed round. And today you can see what the success of those companies looks like, raising 30, 40, $50 million in single rounds of financing as they grow and prosper. That's the world of venture capital. When you have very successful companies, they continue to raise those follow-on rounds of capital. But what's interesting, you'll see here, is the level of diversity. Exactly, this is a first-generation Latino founder CEO. Satish Palvi over here on the far right was the co-founder, and Desta Bukowski, the woman almost out of the picture on that balcony of the New York Stock Exchange, was their first hire. So incredible diversity from day one. Content Stack is an Indian woman founder CEO. I mentioned the twin sisters, on and on. Each of these companies has been a really interesting mix of success as a company and success of diversity, and we're really proud of that. And that's where this leads to some of what our own diversity numbers look like. They're really quite diverse as compared to the norm. And some of these numbers might be shocking to you if you haven't seen them before, that female founders, and this is even in companies where there's just one woman, at least one woman founder on the founding team, it's only 15% of venture-backed companies. That's a pretty low number, but it gets much lower if you say, what percentage of companies were founded exclusively by women, only women on the founding team? And that percentage is 2%. 2%. Now, if you went the other direction and said, what percentage of companies have all male founding teams? It's somewhere around 75%. So it's the numbers are not in the direction I'd like to see, because they actually were worse in 2020 than they have been. They've been incrementing up in a positive way, but there are a lot of reasons that COVID impacted women's opportunities to take more responsibilities, to launch companies, and but those numbers were not encouraging. But we have to know the numbers before we can do something about it. I'm not trying to depress people or shock anyone, but when you're aware of these numbers, it makes us all more able to identify, what can be done about it and to take initiative. So let's talk about the white paper, and I'll give you a little bit of history on our white papers and our collaboration with the Tepper students in completing these. It goes way back. So Mona Kishore, whose name back then was Mona Abdel Halim, before she was married and had 2 children, was the first of our interns that worked with us on these white papers. She's now head of partnerships and operations at Togo Group. She's done, had an amazing career over the last 8 years. So it's been 8 years since we worked together on that original project. The first project was a white paper we called High Performance Entrepreneurs, Women in High Tech. So it was exclusively focused on dispelling the myths around the pipeline myth that there aren't any women out there. That's why no one's investing in them. That's why they're not joining startups, and shared a lot of really interesting information. If you want to see all of these white papers, they're on our website. It's just illuminate.com/whitepaper. You can go and download any of them that are of interest to you. The second paper we did was we had the support of 2 other Tepper students, Lauren and Anna. And what I'm so excited about for both of them is they have each gone on after our collaboration together. Maybe we influenced them a little bit, I hope so. And I think the Sports Center and others did as well, to become founders of their own startups. They didn't do that immediately after leaving Tepper, but they have since. And both of them were involved in our paper that we put out. I think that was in 2018, that we released a really interesting research paper where we surveyed 1,200 people. Half were VCs and half were current entrepreneurs in the B2B space. We went to extraordinary lengths, by the way, to ensure that 1/3 of those respondents were women. And involved a number of women's entrepreneurship groups to help invite people be a part of that. Our goal in that case was to really understand founders' motivations and the barriers that they faced, and also the attributes that both they and VCs perceived as being the most important to success as an entrepreneur. So if you're thinking about entrepreneurship, that would be a pretty valuable paper to read, because it really helps share and understand some of the nuances of how entrepreneurs think about what's important and how VCs think, and they're not the same. Not that shockingly, I suppose, but there are some smart ideas that come out of that you might want to be aware of. So this third paper that we've worked on with the students, you can see that the 2 of our interns, Natalie and Cara, that worked with us on this paper, and what they're doing today. So I put sort of the roles now in that photo of each of them. We didn't have a plan to conduct this research, to be honest with you. It was the students themselves who came to us, the interns from 2 years ago, who said, but what about us? You've surveyed entrepreneurs, you've talked to VCs, we're seeing some really interesting things happening, that so many more students are interested in entrepreneurship than we expected. Everybody wants to join the entrepreneurship club or the VC club. And, is that an anomaly here at Tepper, or is it that way everywhere? And so we said, okay, let's go find out. We decided to use the same questions, or a subset at least of the questions from the prior survey. What's your motivation around entrepreneurship? But in this case, of course, we had to ask, are you interested, to begin with? Because we were surveying a very wide population of students, not just at Carnegie Mellon, but across North America. And this was, again, a sort of by hook or by crook. We used all the contacts and connections we had, but our secret weapon turned out to be Poets and Quants, who was willing to put basically an ad, a notice on their site and let all of the students around the country know that we were conducting this survey and invite them to participate. So we found out, we gathered all their demographics, what school they attended, what undergraduate degrees they held, all sorts of data that if you're interested in it, it's in the white paper that shows which types of students are more interested in entrepreneurship or not, by background, by geography, by school, lots of interesting data in there. But we also really wanted to understand what they saw as the obstacles. And so did a fair amount of additional data gathering around that as well. We sought to target 20 MBA programs. We ended up with more than 30 participating. We had great participation from Tepper. We had, of course, Natalie and Cara, continually bombarding people and asking them to participate. So that was super helpful. But from other schools as well, we had some really nice response rates across the board. So what did we learn? The first thing that was super interesting was the unbelievably large percentage of students who said that they were interested in entrepreneurship at some point in their careers. This wasn't a question of, do you want to do this immediately? But, what's your interest in this as a possible career path over time? 85% overall. 10%, relatively speaking, more male respondents than the females, but there was a very high response rate, really literally across the board. When we also asked, if you're not interested, why are you not interested? The absolute top reason selected really had to do with financial encumbrances, people that were concerned about how are they going to pay student loans off? How are they going to be able to start building a nest egg, whatever it might be? So that was really the number one. And related to that was, I don't know if I can raise the capital. I don't know if I have the ability to do that. Men, interestingly enough, more so than women. And this was this was definitely a surprise to us, voiced a higher concern than the women did over not potentially having the right networks. And we really started to talk to the students about that. So there were a few of these questions that had non-intuitive responses, because we thought, okay, why would that be? And it's still not 100% clear, but one thing that is clear, the entrepreneurs did not rank that, the current entrepreneurs in our prior survey did not rank that as a high barrier, not nearly as high as the students did. And then we sat back and we said, well, that's kind of natural. Of course, as students, your network is not going to be as broad as if you've been out in industry for 3 or 5 or 10 years after business school, formed lots of new relationships, and then start your business and then launch your business. So that part of it was natural, but we're still kind of curious, because my own experience and that of most women would be that their networks are so much smaller of who they can tap into that's of similar background, meaning another woman, that I would have thought the women would feel more so that was an obstacle than the men. So that was just kind of a counterintuitive finding that was interesting. Okay, so then what was super interesting as well, when we really released the paper, immediately we had several groups that wanted to write about it. Poets and Quants, quite naturally, they had helped us with the effort, but also Inc. and Ladders. Institutional Investor, I thought, had an interesting twist on it, because when you hear some of the results, you'll understand why they said venture capital still has a gender problem. Today in the venture capital world, less than 10% of partners are women still today. And so that's part of what they were referring to there. But it was just super interesting how each of these periodicals, these are just the headlines from the stories, took a different stance on it. But I think everyone was fascinated at the level of interest in entrepreneurship across the board. This is not just at Tepper, where we know there's a lot of emphasis and interest around entrepreneurship as a university, and certainly within the business school and the sports center. This was across 30 different MBA programs. So it was just quite interesting to see. So what did we learn? There were some really, really interesting findings here. Some of them could be a little controversial, by the way. First of all, we learned that the most valued, trusted source of information about entrepreneurship for these students was, not surprisingly, entrepreneurs themselves, people that they have actually had an opportunity to meet. And that really suggests how important it is to have these entrepreneur in residence programs where entrepreneurs are coming onto campus, or where students have the opportunity to take a summer internship and work in an entrepreneurial environment, or whatever it might be. But that really, by far, you can see the level of difference of that one response versus all of the others. Mentors, people that they know. What surprised me was the level of confidence in websites and publications versus some of the things that were lower ranked. Classroom education, professors, and oh my goodness, entrepreneurship clubs. So, it's very interesting to me because it really suggests we all need to step back and evaluate how we can make some of those class and student experiences more high impact. But it also really emphasizes how important it is to have that external interaction, which, by the way, entrepreneurship clubs can help enable, right? And so there's some really interesting learnings, I think, from that process. I'm going to pause for a minute. I don't know, can I just again urge people, if you have questions, put them in chat. I don't want to just, again, make this a lecture as we go through all of this. So the second question we asked was, if you're interested in entrepreneurship, why? And what we found was that, men and women actually thought very similarly about what their reasons were for choosing entrepreneurship. And in this example on this page, we compared the research data from the MBAs with the responses that we had from the entrepreneurs in the prior survey. And you can see that there's, while there are some slight differences, they're significantly similar. And that, again, that the women had a slightly higher preference and motivation associated with the passion around bringing a new product or a new service or a new offering to the market, their idea, taking their idea and making it real. But this was the number one motivation across the board for men, for women, for entrepreneurs, for MBAs. Okay. So it was super, super interesting to see that. And then what you'll see on the right of that chart is one of the lowest ranked motivations. And people frequently think, people go to do entrepreneurship purely for the opportunity to be a billionaire, the next Elon Musk, whatever it might be. And in reality, that is not even close to the primary motivation for either the students or the current entrepreneurs themselves that are making a choice to take an entrepreneurial path. Not surprising to me. I've been a founder and CEO of a venture-backed company myself. It was not purely for financial gain. I was so excited about building something, about bringing a key team together, about bringing this idea to the market. So I entirely understand, where everyone's coming from. And I have a question here. I'm going to try to jump in and answer. It says, did you find any biases in the data? Wealth, background type of program, who participated, prior jobs before doing MBA? Some of these things we did not collect. So we didn't have an ability to ask, we didn't feel comfortable, I guess, asking people what their financial status was. I mean, these were all students, but we did and indeed ask them questions about their educational background. Remarkably, even the students with liberal arts undergrads were nearly as interested in entrepreneurship as those with, let's just say, STEM types of undergrad degrees. That didn't really change anything. And no, another question was, did we have any research about the importance of medical insurance when the person was considering entrepreneurship? We did not. But the reality is virtually every startup offers medical insurance that we've ever worked with. And so, frankly, also, I think because of the inception of Obamacare and things like that, there is an ability to offer virtually anyone insurance rather than have some people that might potentially otherwise have been blocked or something like that. I haven't seen that come up as an issue in the startups that we've been involved in, at least. Okay, so I'll keep going. So many of the students already had a startup idea. That was super interesting to us as well. The male MBAs seem to be further along in that process. So, you know, and literally 50% more of them are thinking, actually have a concept that they would like to pursue and may or may not already be working on it. That was interesting to me as well, that there was that difference, because even though the numbers are small, when you say it's, you know, 22, 23% versus 35, 37%, it's a big difference by gender as to who's actually been actively involved in the entrepreneurial process. So that was pretty interesting. So it also was very telling to us that for most students, we also asked the question, what is the most likely way that you would want to get involved in entrepreneurship post-graduation? Very, very few said it was to start their own company. And in fact, it was an equal number who said they wanted to get involved in entrepreneurship, but join an existing startup, versus people saying, I have an idea, but I don't want to do it yet. So that was really interesting. And I think there's, I think, a valid conception that entrepreneurship, if you want to call it that, can be a bit of an apprenticeship, that you can be learning on the job to be a successful entrepreneur from other successful entrepreneurs. And I think that's really true. I know I had the opportunity to do that before launching my own company, and I think it was really quite helpful. So there's let's see, I have another question here I'll take before I move on to the next slide. Is there any common advice you'd give to women founders in Illuminate's portfolio regarding the differences and biases highlighted in the white paper? Well, there have been several white papers, but if you said the one that has to do with entrepreneurs and VCs, yes. I mean, in particular, it turns out that, and I think this is good advice for whether you're a man or a woman, it turns out that VCs particularly value domain knowledge. In other words, awareness and experience in the area that you're actually going to build a product or service in. And so if you have it, don't underplay it. In other words, really play it out. Make sure people are really aware of your depth of knowledge and capability in a given area. If you do not have it yourself, look for co-founders that do. Look for other team members that you might hire that do. You know, have the ability, if none of those is possible, go out and do a ton of communication with your potential user group or customer group. Have the depth of knowledge about that space that you can be the expert, that you can be explaining to your potential investors, if they're angel investors or VCs, or even your friends and family. They want to know that you've done the homework to really have expertise to address whatever opportunity or business problem you're building a company around. So I think that's maybe one of the most fundamental learnings out of this, because what we saw was when we asked the question of, what do you think some of the most important attributes are, or the barriers are, that one came up very highly ranked by the VCs and very, very low ranked by the entrepreneurs. So that was interesting to see, just not aware of how important that might be. So then we also asked about how these students viewed the barriers to success. What gets in their way? We had literally, I know it's a lot, 16 possible barriers, and we allowed them to add any that they wanted to that we hadn't identified. We had used the same list with the VCs and with the entrepreneur survey as well. And what we found was that both male and female students and the founders had, again, as we said before, selected financial security and access to startup capital as the most important and most likely to be not insurmountable barriers for them. And yet the VCs rank those much, much lower. So it was interesting for us to see sort of the disconnect between how the people who have to live in that world, the entrepreneurs, and felt about it, versus how VCs thought the entrepreneurs might think about it. They don't understand how big a barrier that can be for a lot of people, and that's a problem, because there are things they can do. I just had a conversation this last week with a woman founder, CEO, not born in the US. And as part of a term sheet for an investment that we're making with her, we require, as most VCs would, that there be life insurance on the founder. If something was to happen to her, that it would pay the company that amount in order to help offset some of the costs of recruiting a replacement and dealing with the horrible turmoil that would occur, et cetera. And she came back to us and said, well, can the company split those proceeds with my family? And I realized after I talked with her that she had never realized that she could buy herself life insurance. And so there are some really fundamental things that we take for granted as VCs that we assume people know, and that they have the wherewithal to address. And by the way, this is a woman who's been very successful in her career, but outside of North America, and where life insurance wasn't offered, and wasn't aware that could be an option. So there's some really interesting things there. The other thing that I thought was really interesting is that not a single student ranked having a unique idea in their top 5 potential barriers to success. I can tell you, it is hard to have a unique idea. I can guarantee you that. And when we see founders, for example, that might want to sell their company earlier than we think they should, it's kind of a dismay, because we know how hard it is to find and exploit a white space, to find something that nobody else is doing, or to do it better than anyone else can. If you can do that, building that company into something big and successful is really, really valuable, because thinking you can do it again, we'll just sell this one for 25 million. Because that means I'll be able to, have a nest egg of $2 million, as a founder, let's just say. That's where I think VCs can be short-sighted, and where it might be better for them to allow that founder to take a little bit of liquidity when they raise capital, sell a few of their shares and have the ability to buy a house or whatever it is they need to be able to do, and allow them to really build something big. Both the male and female VCs, and all of the entrepreneurs rank this quite high. So what I guess I'm saying is, if you're a student and think that part is easy, it's not the easy part. The entrepreneurs who've actually gone out and tried it, and the VCs are very well aware of that. And then the other one that was interesting was the question about access to the right networks. And in this case, it was the question was asked differently than the one up front, where the males were responding that was one of their reasons not to do venture capital. Now we were saying specifically, what are the barriers? And there was relatively equal response then. But again, in this case, very few entrepreneurs or VCs thought that was a big barrier. And my only interpretation is they're further along in their careers, the entrepreneurs are, but there may be more to it than that. It would be interesting to know. Okay. Any questions about any of this so far from anybody? Anyone in the room have a question? Nope. Okay. So then we asked about, how do you think about getting exposure to venture capital? So switching here from entrepreneurship to venture capital, because we asked about both in this survey. And what students said was it is their number one choice of how they would like to be exposed to it is through an internship. And but they also found that what the feeling was, they didn't have direct experience, many of them, that it would be really, really hard to gain access to that kind of an opportunity, to that internship opportunity. You can see here what influences their interest in venture capital when we ask them, are you interested or not? And by the way, the percentage of students interested in venture capital versus entrepreneurship was much lower. I think it was somewhere around 30 to 35% of the students, and versus, again, 85% interested in entrepreneurship. And then when we asked them, how do you learn about entrepreneurship? You can see what the responses are here, that the top responses were through an internship, which they're saying is very hard to get, or through an entrepreneurship or venture capital club. Okay. So interesting for us, we've done something about this for a long time at Illuminate. And I will candidly say, however, we didn't really understand how important it might be. We knew it was a good thing to do for both the students and for our firm, but we didn't understand how much the students wanted to do this or how much value they got out of it until we really completed the survey together. We think of our student in residence and internship program as an Illuminate superpower. We've had over 100 students that have graduated, if you will, through that program. It's usually starts in the first year, continues into second year. But today those students are out in roles in hundreds of different companies or have had roles in hundreds of different companies, and they're still involved with us, which is super cool. This guy down here on the bottom left was actually a Cal grad that was one of our interns 5 years ago. He left, he joined Deutsche Telekom Capital Partners, so he went into venture after his internship with us. They do late stage investing, and he's the one who actually referred that company PEX that does the user-generated content attribution to us. After he had left our program, he understood what our investing criteria was, saw this company that was way too early in its life for DTCP to invest, and referred it to us. It's one of the top performing companies in our Fund One portfolio. And that really is, a benefit, obviously, directly to us, and a feather in his cap as well. He's been promoted. He's now a partner at DTCP, and we're super proud to continue to collaborate with him. And I have to share our Tepper student in residence as well, including the 3 students who just joined, effective literally this week, as our newest interns in the program. So Jake and Alejandra have been with us since last year and have been incredibly helpful and involved with us. And then Serena and Tyler and Aditya have all just joined us, and we really welcome them into the program. But our class group, if you will, each year grows across many different schools, as you saw in the prior slide, and includes students right now at 6 different university campuses, and we'll probably have, in some cases, we only have 1 student per school. This is a really unusual concentration at Tepper, and it's very intentional, as you might guess, given you guys are such a great program, and you just happen to be my alma mater. Okay. What we're also excited about is how these students are going to stay engaged with us. We did a quick survey of that group last year, and you can see what their backgrounds are. Some are now in technology companies, others in finance roles or venture capital. And we also asked them about purchase authority. Do they have the authority now in their careers, in their positions, to actually buy B2B products and services? Can they actually become customers of our portfolio company? So it's a really virtuous circle. It's an amazing group of people, and we're super excited to have now the opportunity to continue to collaborate with them. And we are having also interns now involved in helping us to set up an actual more formal community so that all of these students former students can continue to collaborate with each other as well. So that is really sort of the story out of the white paper research. I'm going to just pause for just a second and see if we have any thoughts from the audience, because one of our thoughts is, look, we've been doing this for 10 years. We have a history of it. We know the value of it. How do we expand this? Because if this is such a high priority for students, we're a small firm, a small team. There's only so much we can do. I'd love to hear any thoughts any of you might have on how we expand that impact. more broadly. We're working on something ourselves right now, in fact, that I think could help in that regard with a couple of outside organizations, but would love to hear your thoughts on that. Anybody want to add something or a question? No? Okay, all right, we'll continue then. So the second piece of this I promised was to tell you a little bit about Scottie Ventures and the work that they did. It's pretty interesting. What we did was we actually gave them access to our entire history of deal flow. If you're not familiar with that term, what we're talking about is all of the potential investment opportunities that we receive that qualify. And qualify means it's got to be a B2B software company. It has to be headquartered in North America. They have to be seeking a financing round of between $1 and $4 million. And it has to be in one of the sectors that we might invest in within that B2B category. So there's a number of criteria. Not everything goes into this pool, but across about a 5-year period, we had over 4,500 companies that qualified and became, and we collected that data into a database that we maintain. That's kind of like a sales pipeline database, if you've ever used one of those. So we took that data. Randomly, the team selected 400 companies to research. And what we wanted to do is understand of all of these companies that we declined. These were all the ones we declined, not the ones we invested in. And by the way, during that same period, we probably invested in about 20 companies after seeing 4,500. So it gives you a bit of a ratio, an understanding of the ratio of deal flow to actual investment. And through that process, we analyzed each of these companies across a variety of different criteria. First, the team selected their 400 and they put them into sectors. We chose 16, and these are B2B software sectors. And then they did the research using Crunchbase, using other tools to determine how much capital, if any, these companies had raised and how many of them still existed. In other words, what was the failure rate? And then we also did a comparison against the companies that Illuminate actually invested in. And you can see who the students are. The members of that team chose to be an all-woman team. I thought that was interesting. And we had a great time collaborating with them as they pulled out this data and teased out some of the results. And it's kind of interesting. So first of all, one of the things that became super obvious was the very strong level of investment in some categories versus others. So you can see here that of those companies that had survived, so of the 400, they identified 140 that had actually survived. And then if you go beyond that and say, so what sectors did they belong to? There's a disproportionate number that were in the AI machine learning category, in the AR, VR category, and in blockchain. And you can see the few of them. Literally a third of the companies that were able to raise capital were just in those first two categories, which is kind of remarkable. So there's a concentration of interest on the part of investors in some categories and a lot less so in others, as you can see here. And then we looked at what percentage of these companies, again, by sector, were led by women founders, women CEOs. And you can see that it's a very small proportion of the companies that were in the categories that were able to raise the most amount of capital. There's a little bit of a chicken and egg question here, you know, how much of that had to do with male versus female, but I can tell you right now from an overall VC perspective that AI, ML, and AR, VR, of course, it's always these acronyms, but augmented reality and virtual reality, and those two categories did indeed over that period of time receive a disproportionate share of investment by angels and early stage VCs. Blockchain, lower numbers of dollars going in, but a lot of seed stage investments as companies are just getting started in that category. But some super interesting data here, I think, as well. Okay, and then the second piece of it was that, you know, most of the companies, frankly, did not ever attract venture capital levels of capital. So something under $1 million, that's not a VC, that's an angel. And so if you take a look at this and you look at the blue and the green sections, you can see the vast majority of these companies that we declined were not selected by other investors to invest in at significant levels either. But again, certain categories like AI/ML had a disproportionate share of capital being raised. Okay. And then, to the more difficult news, which was we asked them to sort all of this by gender. And what we learned is that even in these really early stage companies where, those first investment decisions are made, that the male-led startups raised much more capital on average than those led by women. And more equally importantly, that gap grew as the amount of dollars being raised grew. So look at the difference between 35 and 4, where companies were able to raise more than $5 million of capital over that period of time. And then the 1 in 5. These are just fairly startling numbers that the women-led companies were raising so much less capital. Now, I have to say we had no criteria in here other than what I mentioned, but these are B2B software companies. This is not, Sally's Bake Shop or something else where you wouldn't need a lot of capital to get started, or where we're not, we are comparing apples to apples, I guess is what I would say, when we were comparing these things. Okay. And then I think the other piece that was interesting is some of the very clear differences in in the outcomes of these startups by gender. It's not surprising that if the women were able to raise a lot less capital, that they had a higher failure rate. What is a little surprising is that the acquisition rate is so much higher, right? 5 times as many percentage-wise of the male-led companies were acquired, meaning they got some kind of a reasonable exit for all of the effort they had put in. But I think it is good that the numbers are virtually identical for those that were operating that had raised capital. So, once having raised capital, what this really is telling you is that the women-led companies are being forced to, or choosing to, one or the other, to operate much more capital efficiently, because even though they've raised capital and are still operating in the same ratio to the men, they've raised a lot less capital to be able to do that with. Okay. And so a larger proportion of those women-led companies had closed down versus being acquired. That's where you can see this big trade-off here. It's almost identical, right? You've got 27% combined between acquired and closed for the women-led companies and 26% for that combination for the male-led. It's just they find a way to get these companies in front of someone who will pay something for it. How about that? So I've got another question. It's how do we have any data on how many women whose startups closed down went on to found other startups? No, we don't. I wish we knew that information because it would be very interesting to know, but that wasn't part of the scope of the Scottie Ventures work. Okay, so from our perspective, if you take all of this in and put it together, what does it mean? It means we still have a really, really long way to go to level the playing field. We know from our earliest research, which was done, almost 10 years ago, that women have comparable educations, they have comparable motivations, they have comparable interest in entrepreneurship. We've seen that across all of this data. They have face the same barriers that men do in many ways. But what you'll see if you read our research report that looks at how VCs think about male and female entrepreneurs, that was the one we did in 2018, what you find is that the VCs, and it doesn't matter, by the way, if it's a male or a female VC, assume that the women are less likely to display the attributes of success that they look for. Just assume it without ever having met them. And also assume that they will face higher barriers to success more frequently and higher than their male counterparts. So if you step back and say, so what's the impact of that? Well, if I'm an investor, I'm frankly going to be thinking, well, I want to invest in, if I'm looking and comparing two opportunities, I want to invest in one that's of lower risk and that has higher probability of being able to raise capital and succeed. So a lot of these, issues, unfortunately, are sort of self-fulfilling. If you presume that as a VC, you probably are going to choose the male-led company over the female one, or if you choose the female one, you might give it a lower valuation or give it less capital. And that's a self-fulfilling prophecy of failure if you don't fund a company sufficiently to enable it to succeed, to compete with direct competitors who might be raising more capital for exactly the same opportunity. So there's some really interesting things there. So the ability to raise capital is pretty fundamental. And so part of what we do when we work with our entrepreneurs is help educate them on how to pitch to VCs and how to raise that next round of funding. And, with half of our portfolio with women CEOs, we know we have to do that. And so we do it very proactively and are a part of that process. It's really, to me, an important element of making an early stage investment is collaborating with that founding team around all of this. And by the way, I don't want to suggest that it isn't hard for men as well. It is. Entrepreneurship isn't easy. Raising capital isn't easy, even when there is massive amounts of capital out there, which there is today. You still have competition for it. And so while late stage venture is growing astronomically, the amount of capital being put there, early stage capital actually declined slightly over the last 2 years. So you have to be aware that it's an ongoing battle, if you will, to get investor attention, et cetera. So I have a couple more questions here. One of them was, have you observed a difference between how men and women pitch to us? I heard that men tend to blow up numbers more, whereas women tend to be more accurate, showing lower estimates than men. Yes, I'll just say yes to start with. That the answer is much more frequently. For whatever reasons, it could be confidence, it could be desire not to fail, it could be any number of different factors. I'm not a psychologist, I can't explain, but much more frequently, women will underestimate or be super realistic about their numbers, and men will have more aspirational numbers. I wouldn't call them inflated, but they're aspirational. They're basically saying, I believe I could do this, but basically everything has to go right for it to work. Whereas women are more likely to say, I know everything won't go right. I'm going to be more realistic about this. And so I think that is something you have to be very aware of when you're pitching. And frequently, as an investor, your investors are going to look at your numbers and discount them anyway. They're going to say, if somebody pitches that they're going to 6x revenue in 1 year, we all know how incredibly difficult that is to do. If someone tells you they're going to, in the industry for SaaS, they talk about triple, double, which is triple your revenue year on year in your first 2 years, double the next 2 after that. That's a very realistic set of numbers, but a woman might come in and it might be 1.5 to 2x, and that looks malnourished, right? It doesn't look like what a VC expects to see, and so that is an important point. There's another question here. Let's see if I read this minute. I think it will be very interesting to see what the women whose companies closed down went on to do. So yeah, it would be. I think there's some opportunity to do that, although it's entirely possible that, it would take a fair amount of work to figure that out. I guess we can just do a search of those 250 or so people, I guess for the men and the women, it would be interesting to look at both and see if there's differences between how each of them reacted. Maybe that's a project for this year. Okay, so that is it in terms of what I have to share today. I don't know if there are any other questions from the group, or Allison, if you had any questions.
We don't have any in-person questions right now,
Okay.
but yeah.
All right, then I think probably we should wrap up. I really appreciate everybody joining us today. It's been fun. I can't wait till it's more live and interactive next time. But hopefully this has been helpful. And just a reminder again, if you want to take a look at the detailed white papers, they're at illuminate.com/whitepaper. And you'll be able to download any of them there that you want to. And wish all of you success in your entrepreneurial careers. It's a great time to be an entrepreneur. And I'm super thankful that I've had the opportunity to be basically on both sides of the table. Oh, one last question here. I guess I could fit this in. Have you seen a culture change within the VC space where they question the blow up numbers now that there is research and data out there? Honestly, the VCs have always questioned the blown up numbers. So I don't think that's anything new. I think that's something that most experienced venture capitalists are double checking those numbers, but they're going to double check them even if your numbers start out being realistic, and probably discount them somewhat, even if they start out realistic. Hope that's helpful. All right, everybody. Thank you. Enjoyed it.